G'day legends and welcome back to another video. In today's video we are doing a short-term and macro analysis discussing some major warning signs we need to be paying attention to moving into the new week. We'll also be taking a look at the recent economic news, discussing the interest rate data and the Federal Reserve press conference. We are going to be discussing the 2-week chart, looking at our key levels of structural support, our momentum indicators, and even discussing a very interesting pattern developing on the logarithmic chart, which is an ascending wedge formation. We'll be discussing that in the video today. We'll also be taking a look at the short-term price action since Bitcoin has rejected from that $116,000 level, moving through both of our uptrends on the RSI as anticipated in our prior video, moving towards that $107,000 target. We are going to be discussing what this means for Bitcoin, if we are going to see a bounce here, and what would happen if Bitcoin drops below that major point of daily support, as you can see, at 107,000. And finally, we'll be discussing the macro charts as well as the total cryptocurrency and altcoin market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. And if that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. Totally free. That is the link down below. Check it out. Let's jump into the content. So as we can see, guys, Bitcoin pretty much played out exactly as we anticipated in our prior video, which was 116 being that rejection point. You can see here we have that red dot print here. On the mark of Cypher B, we were seeing rising momentum into resistance. We saw positive weakening momentum as per this red arrow print over here, suggesting that although the market was pushing into resistance, we were seeing a little bit of weakness from the buyers that increased the potential for rejection to take place. And we noted that the loss of that 113.5 to 114k support, which would be this horizontal level, breaking below there would constitute, or would start, what I'm even talking about, constitute was the word I was looking for, the next move toward the downside into support. So we're seeing that play out now. We have now reached a point of liquidity. This is going to be our sell side liquidity, our point of support here at around 110,000. Also a psychological level, a whole number 110,000. So we do have a chance for the buyers to jump back in and reverse the price. However, for us to be confident again for any sort of macro reversal, any sort of high time frame strength to really build up into new all-time highs again, we need to get back above now this 113.5 to 114 level, and primarily this 116, as that is going to be that high time frame point of resistance. We'll come back and discuss this as well in the video today. So a lot has happened over the short-term price action again. The interest rate data did come out, so we'll discuss that in just a moment. Let's start on the market data, however. So taking a look at 24-hour volume and liquidations, we've had a bit of a surge here in 24-hour liquidations and volume. Volume up a little bit, around 2.7%, sitting relatively high at 341 billion. Liquidations up around 1.35%, but it's sitting very high at around $500 million, not 594 million over here, 459 million coming from longs, 135 million coming from shorts. Again, this comes as Bitcoin does correct toward the downside following and during that interest rate data. If we do take a look at the S&P 500 and the DXY here, you can see the DXY has pushed up very slightly. Now, probably people are wondering why did the DXY push up if interest rates are reduced. Again, this is number one, because interest rates are already priced in. And number two, it is also because the perception of future economic changes massively impacts the risk asset market or currencies markets. If we take a look at Bitcoin, Bitcoin has corrected. I think a lot of people were anticipating maybe sideways price action or maybe a rally, but we've already said that if there were any sort of indication that Jerome Powell was going to be more neutral to bearish or uncertain during that meeting, during that Federal Reserve press conference, we would likely see the markets pull back. That is because the market hates uncertainty. Anytime there is uncertainty, we see the market pull back a little bit. Now, with that being said, if we do take a look at the S&P 500, the S&P 500 has been rallying very aggressively. It didn't really get hit as hard as Bitcoin with this recent pullback, but we can still see here a little bit of a drop on the daily. We are still watching rallies into that $7,000 level. Of course, only really turning bearish again if we break back below 6,800 or that 50 EMA. That is when we'd expect corrections back into 6,200. Until then, watching 7,000 as that next resistance. Let's quickly touch on the interest rate data. So as we know, 25 basis point reduction was given. That is obviously what the market anticipated. Around a 99.4% probability was anticipated. Jerome Powell did mention that December cuts could happen, but they're definitely not guaranteed. He was still tossing up between trying to drop rates to stimulate the job market, but not to do so much that inflation begins to rise. He also noted that because of the government shutdown, they didn't have full access to all of the economic data they usually have access to or want to have access to give any sort of clarity in their future decisions. So for all we know, we might see a pause in December. We might sort of see a rate cut in December. It's very hard to say for sure. And that uncertainty has driven at least Bitcoin down a little bit. If we take a look at what else they said, they were looking at doing a balance sheet runoff pause. They were looking to pause QT. This historically could result in cheaper debt. This, of course, is good for the risk asset market, but how that implements and when that implements is going to be, of course, up to how the future economic data releases. So still an overall uncertain environment, but interest rates coming down is overall good for the risk asset market, but doesn't necessarily mean we are going to see immediate rallies or even immediate midterm rallies in the market. So let's go ahead, guys, and jump into Bitcoin. Before we do that, go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are down below. You'll go ahead and get access to all of our trading fee discounts, 15% of all your trading fees, up to 45% based on your trading volume. You'll get access to all of our exclusive monthly bonus campaigns. You'll go ahead and support me making the content, and you'll support yourself trading on exchanges I use and I trust. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and start on the higher time frame. So we're going to start on the 2-week chart because I think the 2-week chart gives a very, very clear picture of what is happening with Bitcoin, not only what is happening, where Bitcoin is likely to move to, but it gives the most clear picture on trigger points and invalidations of the current weakness. So there is absolutely no uncertainty when it comes to the weakness that has been developing for Bitcoin over the course of the last few months. We have seen numerous large wicks eaten up toward the upside, and we're seeing momentum continue to drop downwards as volatility begins to compress. We're seeing the moving averages push closer to the price action. We're seeing the price come into the bull market support band. We're seeing the price come closer to the 250 EMA. So we're seeing a little bit of exhaustion develop here on the higher time frame. Now, the 2-week chart tells us one very important thing. It tells us at what point would this exhaustion dissipate to facilitate the next leg upwards. And when we're looking at this exhaustion, we are watching the RSI as the primary means to evaluate that. If we're looking at this bull run here, ever since we broke out of the 2-week Gaussian channel, we can see each respective high on the price action has as well established a high here on the RSI. With the price action creating higher highs along the way, the RSI has been creating lower highs. This is a classic sign of exhaustion across a higher time frame. For us to be confident Bitcoin will break back through this high, we are watching for the RSI to break out. If this does not happen, the overall expectation is that we will see mean reversion into the 50 EMA, which is sitting around that 92, potentially even lower or a little bit higher depending on when we reach it, around that 90, essentially sub $100,000. Now, although this is signaling a bearish correction, it can also be used as invalidation for that downward move because, of course, if we take a look at the weekly structure, we've got our weekly range high at around 117.5, 118,000, which is a very important level, 118,000. I want you to remember 118,000, and that would likely coincide with the breakout on the RSI. So by breaking through 118,000, we would likely see a 2-week positive momentum shift, which would facilitate continuations higher. Now, if we go down to the short term, we can confirm that because, again, if we take a look at this chart we drew out here, and this is essentially the different phases. This is going to be bearish to neutral phase. This is going to be a bullish transition phase, a bearish transition phase, a bullish phase, and a bullish phase over here. You can see above 118,000, which is this orange line, we move into that bullish transition, which will increase the probability for a move into a new all-time high. So we do have structural confluence there on the short term with those key horizontal levels, annotated by, of course, our weekly range high, and of course, depicted by that 2-week RSI. So the weekly chart, the 2-week chart particularly, is something we need to pay attention to. Now, alongside that, we can see the bull market support band on the 2-week has been respected essentially this entire time. Now, we broke out of the bull market support band on the 2-week all the way back in December 2022. Now, I want to show you something. Back in December 2022, we saw the breakout of this pattern here. Now, this pattern here was a falling or a descending wedge formation. Now, this happened at the end of a major downtrend. Now, when we see wedges develop at the end of downtrends, it generally signifies that the strength of that trend is beginning to exhaust. And when in a downtrend we see exhaustion, what that means is buyers are stepping in and the sellers are exhausting, which increases the potential for reversal. Now, we saw that reversal develop. We discussed this pattern as it was playing out. And from that pattern, we broke above that 2-week bull market support band. Now, ever since that point, all the way back at 20,000, we have been trending literally above the bull market support band on the 2-week chart. So we know that for the bear market to start, or at least for this macro uptrend to end, we would need to see the loss of this level, which is sitting at 103,000. So let's take a look at 103,000 now on the short term. If we see 103,000, where does that sit? 103,000 sits right over here, which is going to be that weak low, that sell side liquidity, which is sitting in that transition phase from neutral to bearish, and then of course into macro bearish. So again, it lines up with these levels of confluence from a horizontal perspective and from our points of liquidity and prior support. So all of these points here have points of confluence. They are significant levels where major shifts in the probabilities for directional continuations will occur. Now, I want to take a look at something a little bit more speculative before we move to the weekly chart, and this is going to be the log chart for the 2-week. Now, I do not use the log chart pretty much at all. I don't really like using the log chart. I don't think it's necessary. Its only real use is to compress large amounts of data into a visible view. But if we take a look at this uptrend here on the log chart, we can see we are forming somewhat of a rising wedge formation. Now, rising wedge formations are of course bearish. Maybe if we do drop below that 103 level, it just adds another point of confluence that the breakdown here increases the probabilities for corrections. Again, the measured move expectation 0.1 to range 0.2, drag it down, takes us to the Gaussian channel lower band. If we go back to our normal chart, That also takes us into this higher time frame point of support. We talked about where we could see the bear market bottoming or where Bitcoin could bottom. We talked about potential ranges between around 36,000 as a high of around 54,000, and that sits right in that range. So our low target 36 to 54, that sits right in that level if this were to play out. Something to pay attention to. Of course, all of that goes out the window if we see that positive momentum shift happen on the weekly, but those are warning signs nevertheless. Let's jump over to the weekly chart now. The weekly chart becomes a little bit more clear. Taking a look at the weekly chart, the loss of the 50 EMA and Gaussian channel upper band on the weekly in conjunction with the breakdown of the horizontal low of the RSI, which has historically, well, at least within this bull run, shown us major reversal points of the price. If we take a look at every time the RSI has reached this level, we saw a major reversal upwards, retested it again, major reversal upwards, retested again, major reversal upwards. If we see the breakdown at that level, it is likely this reversal pattern will end and we will see a correction in conjunction with the fact when we look at the loss of the 50 EMA and Gaussian channel upper band, historically for Bitcoin on the macro chart, that has triggered bear markets. So we can see instance 1 far left over there, instance 2, 2018 over here, instance 3, 2022 over here, where you can see every time by breaking below the 50 EMA and Gaussian channel upper band, we have seen that capitulation phase of the bear market start, meaning if we see that happen again, we could see a correction come for Bitcoin, which may take us into the midline, the lower band, the 200 moving average, depending on the strength of that downtrend. These are things we need to pay attention to, but when we're taking a look at what would actually cause any of that stuff we just talked about in the high time frame to happen, we need to look at a few things. We need to look at, obviously, policy, because policy drives demand, hence why I've been talking about interest rates. We need to look at context, and we need to look at how the price action is actually developing on the short term, because what happens on the short term spills over to the higher time frame, right? The higher time frame was lagging to the short term. So that takes us to our short term analysis. And I showed you these different zones in our prior video, and I'll talk about them today again, but it's very, very important, and they simplify my overall expectations for Bitcoin. Very simply put, this gray zone is the neutral to bearish zone. And the reason why it's a neutral to bearish zone is because I expect sideways chop to occur between these levels, meaning I do not expect any sort of price action, whether it swing to the low or swing to the high or swing to the mid or back. It doesn't matter what happens. Nothing here has any more significant impact on the macro chart than anything else, meaning the high time frame probabilities for Bitcoin do not change while Bitcoin remains above 107 and below 118. That means it is neutral. However, it is neutral to bearish because the current trajectory is downward sloping, and the context of the weekly chart is that we are seeing exhaustion and negative momentum build. So we have to have a slight bearish tone with that. Hence why we've been looking for rejections as we reach these prior points of resistance. If we're looking at when we transition into the next leg down, that happens underneath 107,000 into our high time frame point of liquidity at 98 to 100, and below 98 to 100 there is pretty much no hope the buyers get back in control until we see larger, more aggressive pullbacks for Bitcoin. So that would be our bearish transition or the next leg down. And below 98,000 would be just straight up macro bearish, okay? When we're looking at moves toward the upside, we move into the 118 to 120,000 region. This is going to be the bullish transition where buyers will have a chance to then break 120. And if we break 120, we move into the macro bullish transition where we see the 2-week momentum shift, we see the invalidation of all those warning signs we discussed, and we likely see the price push into brand new highs. So you can see how those levels, when laid out like this, actually become very obvious. But what's important is what happens here, because it is unlikely that we are going to see a move up and then back down. It is likely that the directional break, whether it be 107 or 118, is going to be a break that maintains and facilitates a move on the higher time frame, whether it be an upward move or a downward move. So let's take a look at the short term. Now, to put it very simply, guys, 116 was the level we had to break above. We showed you already 116. We are expecting a move to 107. We still anticipate a move back into these lows, which will test these levels of support. Again, if we drop below these levels of support, we enter that next leg toward the downside. But what we can see here on the hourly chart is we can, so I'm just going to go ahead and delete some of this stuff really quickly to make it a little more clear. We can see a retest of support. We do have a few points of support. We have another support over here around 109,000, 110,000, and then we move into the 107,000. So if we're looking at potential further corrections, we need to do two things. Number one, we need to remain below the break of structure, which is 113.5. So while we remain below 113.5 as expected, any sort of bounce is just a short-term bounce before the next leg toward the downside. Number two, if we do drop back below 110,000 here, expect the next leg down to 107 to occur, okay? And if we're looking at proper reversals, we will need to break above 113.5. Until any of that happens, the overall trajectory is still down. It is still showing weakness. So we do have some we have some respective downtrends in the RSI, of course, which we can look for breakouts or potential reversals to happen. Again, even if these reversals happen, we're watching break of structure levels. We're watching 102. We're watching 113 as potential targets, and of course both of these levels are where rejections can develop back from. That is it, guys, on the short term. There's really not too much more to say because from a predictive perspective, this is currently play out. We did our prediction. We're watching for this to play out. We've now reached support, so looking to take profits here, looking to mitigate risk, move entries back into stop losses, stop losses back to entries or into profits, and just watching to see how the price moves for that next leg. Other than that, guys, I think I did a pretty good job at explaining everything for you guys. I think we've kind of left no stone unturned. We didn't talk about the daily chart, but there's not too much to say for the daily. I think a lot comes down to this range here and then these two levels. Because these two levels, as we discussed, have direct implications for how that high time frame chart is going to play out. So we'll leave it there. We'll come back and discuss the total cryptocurrency market cap tomorrow and the altcoin market cap tomorrow, maybe Bitcoin dominance as well. But for today, I think we'll leave that analysis there. A lot to digest and think about. Hope you all have a fantastic rest of your day. I'll catch you guys all in tomorrow's video. I'll see you then. Bye.